Now, stock markets will be keen to forget the first week of 2016, but the US economy has ended the week on another high. Nearly 300,000 new jobs were created in December, helping to keep growth robust. But not everyone in the banking industry is feeling it. Layoffs and lower salaries are part of the new reality. Karina Huber has more.
All the banks were having a big old party.
As chronicled in the movie The Big Short, banking was once among the most attractive industries for the brightest and most ambitious. But since the global financial crisis, that's less so.
There is fewer dollars available to you as an employee for a bank. There are fewer jobs available to you inside the bank.
Bloomberg reports that 500,000 banking jobs have disappeared since the 2008 crisis. While most of the layoffs have already occurred, the downsizing is far from over. Deutsche Bank recently announced it plans to lay off 26,000 workers by 2018, and more banks are expected to follow suit. Automation is partly to blame.
Well, Americans seem to want to use their mobile phones to communicate with their banks and obviously the internet. And therefore, there's been a large number of branches that have been closed. And then, when we get further up the chain, so to speak, transactions are now being handled by computers that were once handled individually.
Another cause for the layoffs? Regulation enacted since the crisis that is meant to stop banks from taking on excessive risk.
Certain businesses are no longer viable for banks. In other words, you can't trade, the way you were trading in the past. Proprietary trading obviously is illegal. You're not able to trade commodities the way they were traded previously. You have to go through clearing houses to trade a variety of different structured financial products. So all those businesses are being eliminated.
Beauvais says where there is opportunity among banks is in the IT sector. He says you have a better chance of getting a job at a bank with an engineering or math degree than you do with a business degree. And while the pay may be lower at banks now, it is still above most professions.
What is really booming right now is the so-called shadow banking industry, which can include hedge funds, peer-to-peer lenders, and private equity groups. Unrestrained by regulation, the pay in that industry can be astronomical. So it's no surprise that it has replaced banking as one of the top spots to work among business school grads. Karina Huber, CCTV, New York.